guys, Mike here. So, oh boy, we got a lot to cover in this video. Another sell-off day and some major moving averages were hit, some were pierced, and so we're going to go through that and really take a look at that stuff. But the truth is, I mean, something happened today, which I don't think we've seen in a while, man. It was very strange because, again, what's happening and I found this great article. I'm going to share just a couple clips with you here, but to really sum it up, because the biggest question I get from all you guys, and I don't blame you, is I don't understand. You keep talking about the bond market and the yields and all this stuff is happening, and why is this happening? And the truth is, you know, there's a simplified version, and then, which I'm going to give you, and then there's the complicated stuff, right? The complicated stuff, which this is what we don't know. We don't know what's breaking behind the wall, okay? It's kind of like a pipe in your house. Like, usually they don't just straight up burst a lot of times. You know, a lot of times you'll start having a little leak there, and then all of a sudden it'll spread. Or even better analogy would be the windshield, right? A rock comes up and it hits it, and you're like, ooh, and it's just that little bitty spot. But if you don't get it fixed, what happens a lot of times? It'll start to spread, right? And so we don't know if stuff's breaking behind the scenes. We just don't know, because yields hadn't gone up this fast, and the yields keep going even though the Fed hadn't been raising rates, right? They raised them, but then they hadn't raised them since what, July was the last rate hike, right? And they probably don't raise them in November, December, but yields overnight keep spiking, right? We hit 5% on the 10-year, and then the 30-year hit a new high over like 8 o'clock this morning, I believe it was. And so that stuff's happening, and it's freaking the market out. And you know, I was discussing with some of the members. I said, maybe this is a moment where you see, because algos is what runs this market. I've showed you videos of how it just feels, and tomorrow's video you get to see that again, of how liquidity grabs work and everything, and market structure and everything. But when you have computers, AI, running this stuff, who hadn't been programmed for a time period like this, we've never seen it. The algos, the AI system has never seen it. And so you're seeing these crazy swings up and down and all over the place. And then this is going up. So that means this should go up, and instead it goes down, right? That's what you're seeing right now. So it's kind of, I'm just kind of sitting back going, like something interesting is happening. I feel like I get this feeling something's happening behind the scenes, but you just don't know what it is, right? And again, I've always said, as long as nothing major happens, which I'll show you in just a second, all these unrealized losses are fine, right? It'll just keep going. But it's the stuff you don't know what's happening that's the danger, right? And so, you know, I'll share this with you real quick, though. This came out yesterday, and it was the $24 trillion problem haunting Wall Street. And this is what we don't think about. And I'm as guilty of this as anybody else. We don't think of the supply when it comes to bonds, right? Because if you're like me, you never really thought about the bond market that much because we didn't really have to. But it says right here, a strange thing has happened recently. After the Fed stopped raising interest rates, the yields on longer-dated U.S. government bonds, those that mature 5 years or more after issuance, kept rising higher. In bond markets, yields rise when bond prices fall, so the crash in prices of treasuries in recent months has also showed up as a spike in yields. The 10-year treasury bond, the most important and widely held financial security in the world, that's why I always talk about it, jumped from 3.3 to 4.8. That doesn't sound like a lot, does it, in the last 6 months? But that is a huge jump because the bond market is used to small increments, right? And so the heavy deficit, and of course, what's causing this? The heavy deficit spending of the past few years has been paid for by issuing trillions worth of bonds to investors. Check this number out. Today, the total treasury market is just shy of 24 trillion, up from 16 trillion since 2019. So in 4 years, the bond market has increased by $8 trillion. That is debt, people. All right. To a bond trader, though, the expansion is not just abstract and all that good stuff. It's the supply. Okay. And that's what's freaking people out. Not only are there more bonds for sale, there are fewer big buyers. How many times have we talked about this? Japan, formerly the largest foreign purchaser of U.S. Treasury debt, has cut down on buying treasuries. China, another huge holder of American debt, has been a net seller lately. And the Fed, the largest holder of all, has not only stopped buying treasuries, it has sold another $1 trillion of U.S. debt since last spring. No wonder the bond markets are headed for an unprecedented third straight year of losses, which has never happened. And just look at Bank of America, who just reported earnings. They are carrying right now an increase from second to the third quarter, $131 billion in unrealized losses right now. Look, this goes back to, what is this, 2015? Look at that. 131 billion. Just one major bank is carrying just that. That's crazy. Now, of course, you know, people keep doing what? They keep trying to buy into TLT because they think this is the bottom. And maybe it is, you know, maybe it is for sure. But, you know, I do want to say something about that real quick, and then I'll get back to the bond stuff, make sure if you remember, I did put this article so you can read the whole thing down in the chat, as well as I put it in the Patreon as well. Now, understand, and before we continue, guys, please hit that like button there at the bottom. Give it a thumbs up. Helps people find the video. And if you like this kind of content, think about subscribing. I appreciate all you guys' support. I think it was it modern monetary theory or whatever it is, that stupidest thing they ever came up with and made people believe, and I've been railing about this for 3 years, and people tell me I don't know what I'm talking about, which is basically you can run up as much debt and deficit as you want to, because basically you can print your way out of anything, right? We're the world reserve currency. It doesn't even matter. Again, I'm giving that a bad summary, but that's kind of what it means. But in common sense, does that make any sense? None, right? And again, you go up so fast with it that you're like, people freak out, okay? And you understand, we depend on other countries to fund our lifestyle, our government lifestyle, I guess you could say, right? And then you got to think about yourself. Other countries are in shambles right now. Like, you think our economy and our market looks rough? Have you looked around the globe? That's what's even scarier. Look at China. Look at that real estate market. All those bonds are fixing to default on. That's why the stocks aren't going up, even when China's going, don't worry, we'll take out short sellers and we'll re-educate them. All this stuff they're doing, and yet the stocks keep going down. They're not reacting anymore to that news. What they're reacting to is, ooh, these are billions of dollars in bonds that we're fixing to default on, right? All those real estate companies. So that's a bigger problem, because the majority of their wealth is in the real estate market, right? Look at Japan. Look at Europe. Look at Canada. You guys are always telling me you're trying to buy a house up there, And so if you think we got it bad, look around. And that's the scary part, right? When you depend on other people to buy your debt. And then on top of it, let's be honest. Look at the shambles our government is in right now. If you were a foreign entity, and I'm not trying to pick a side on this, I'm saying if you were a foreign entity, would you want to start buying our debt? Really? A 30-year bond? Would you really want to do that right now? If I looked up in Washington, especially if I was a foreigner, and I look up there and I see a person in charge of the country who literally can't stay on his feet, and he's painful to watch talk. He literally forgets what he's saying, right? I saw him just the other day. And I'm not, again, this ain't about party. I'm just literally judging the individual, because don't trust me, I'm finna go to the other side. And then you got the Senate, which is so tied up that the vice president has a cast to vote, but then you got the top Republican who's freezing on TV multiple times. We know what's happening on him. Then you got the House, who literally is grinded to a halt because they can't elect a Speaker of the House and keep him, right? And so it is a you-know-what show, SHBB show. It really is. And does that put confidence in people to go, yeah, and then you got the president going, we need 100 more billion. We used to throw billions around like it was nickels and dimes. Now we just throw 100 billion around. No problem. Quarters and nickels, baby. 100 billion. We need 100 billion. Where are you getting that at? Right? We already got to issue crazy amounts of debt for this $2 trillion surplus. And don't think, like Paul Tudor Jones said, I cut this out of his interview the other day for you guys, but I'll say it now. Like he said, when I say it ain't gonna get no better, the people running most likely going to be the top two candidates. This is their whole fault. It started under Trump. Right? Because they issued how many trillions of dollars? Right? And that's fine. Send me checks. I'll take them all day long. But then, as Paul Tudor Jones said, Trump ate 3 Oreos out of the 12-pack, and then he gave it to Biden, and he ate the rest of the 9, and just kept it going. And they went, but according to modern monetary theory, we can just spend whatever we want, and there's no repercussions. Right? But that's where we're at. And so, again, if you're looking at this country going, I guess I'll buy your debt. No. Especially if you got problems of your own. Right? So but that's what's happening. Like, we've never come across this before. People have actually finally reached a level at a fast enough pace where people for the first time are going, 30-year bonds, I don't know about that. And so yields have to go up to get them to buy it. Right? And so is that going to stop finally? We'll have to see. That's what you got to wake up for. People don't know. People keep saying it. But again, we've never seen this. We've never seen banks with hundreds of billions in unrealized losses just sitting there, right? We've never had the Fed just going, just borrow as much money as you want. Just give us your bonds and whatever. It's crazy times right now. And I'm just trying to put that in perspective. Not scary. I'm literally just putting that. That's how I'm looking at it, right? And I get passionate about this stuff because you know how I feel about people in Washington who we pay way too much money, right, for what they're doing. And it's terrible, dude. If that was a freaking business, come on, man. You wouldn't invest in that business, would you? Seriously. If that government up there in Washington was a business, would you actually buy stock in it? Come on, man. The way it's run, it's just a shame. It's sad. Sad. And we should be ashamed of ourselves for even voting those people in. So think twice when you go to the voter's booth this next time, please. And I'll stop on my soapbox on that one. Now, let's keep this in perspective where we're at. Okay, so when you get a lot of selling off, people are feeling stuff. Understand the S&P, obviously lower highs, lower lows. When we break this level, that's what you got to watch right there. Again, that's going to be a key level to watch. If we do, yep, we're going to be in for some more hurt right now. But when you look, when we pull out, what do you see? It expands, it contracts. It expands, it contracts. Except we went on this crazy expansion right there with the Magnificent Seven. And so you're going to have a bigger contraction. Right now, we're at a key level. That's what I'm saying. If it breaks that level, it's a big thing because that is the 50 Fibonacci level for the retracement. A lot of people look at that. So that's when algos will kick in, things like that. People will start coming in the market. So we got to watch that. Again, it also lines up almost perfectly with if you go to the left, that high right there. And so that is not a good thing. Now, here's the 200 moving average. We actually ended right below it, just a speck below it today. That is another big one. Remember, nothing happens good below the 200. Again, there's your 50 fib, almost lining up. Is right below the 200 moving average right there. Now, multiple big things happened today. Remember this yesterday? I told you a big move. It just kept wedging in. It finally broke down below. So we get to see if that weekly fair value gap is in play. Again, when we bring the 200 up, because of the Magnificent Seven, this is way above its 200. The Dow is below its 200. The IWM is below its 200. The SPY is sitting right at its 200, the S&P. And now you're sitting there with the NASDAQ almost 5% above its 200-day moving average. So which moving average counts? I'll show you a chart on Sunday to let you know that right there. But again, major move up. We share and draw a fib, from there to where we started that one right there. You can see right at that 200 is where the 50 Fibonacci would be for the retracement. Again, moving average would be moving up by then for sure. But again, it's just a major level. We'll have to see if we get that far or not. That will be a gift, by the way. But we'll see if the SPY is what starts bringing us back up, which means you need banks and oil stocks, right? The IWM, still a hot mess, man. It's still sitting in the supply zone. It's not broke down through it. It definitely went down into it, that is for sure. This head and shoulders is still playing out as a beautiful head and shoulders, by the way. A lot of times they do not play out, as you've seen. But this one right here definitely is. Again, it's been down, 12% since we started talking about it. It's right down that right shoulder was starting to form. Graveyard of gaps left behind, which I'll go over that in Saturday's video. Some of you guys had questions about that, way below the 200 moving average. And when you go back here, again, that level is big right there. I mean, you do not want to lose this demand zone. Okay, it's still in that demand zone. I showed you yesterday like 12 or 13 times. It has come up from that, okay? And everything is starting to get where it's going to be oversold, right? When you get this much red, there's going to be some kind of bounce, whether it's relief bounce or the real thing. That's what you just don't know. Because remember, a lot of people are going to be doing what? And we'll talk about this with Tesla. Shorting, right? What happened to Tesla? Again, getting crushed down, broke down below its 200-day moving average, by the way. It's not too far below it, but again, losing 200 is not a good thing, especially closing below it for the day. And again, a lot of pressure still going on this one. And when we put a fib on this one, I mean, we can see right here, right now, if you go from that point right there where we actually started that move back up right there after selling off again, we're below the 50 Fibonacci level, but we're also right around that golden pocket area. So keep that in mind. I actually have a line right there where I'm like, okay, that should be a good bounce point because it lines up with the golden pocket. It lines up with some support to the left right there, as you can see. So if we get down there, which looks like around like between 202, 206, just somewhere in there, I mean, that would be a good place. Not saying, but Tesla, let's be very straight about this. How many times have we seen it? It bounces, and it bounces really hard. And why? Because Tesla is the only stock I know of. I just heard two people debate this yesterday where literally you have Tesla people, they just love the stock. They love Elon Musk. They'll do anything for him in the stock. And then there's people that just hate it. They don't like him. They don't like the stock. And so they try to short it to death. And then the people that love it, they're buying it every dip, right? And it's the only one I've seen like that. But we all know what pushes Tesla. The options flow. So because what happened when it went 100? Well, I showed you guys, and it was perfect. The 100 put wall got put up like a week in advance. We were talking about it. And what happened? It came down within pennies of that and just rocketed, right? Because the shorts did what? They got greedy. They just kept pushing it down to zero, and then they get burned. And that's why it moves so fast. And then when options start coming in, right now, what are you seeing? Puts. So it's getting pushed down really fast. Shorts are piling in, right? And so that's why you see these major moves. It moves like no other stock I've ever seen. So let me know if you can think one like it. But that's just the way it is. And so we'll get to a point where you'll hopefully, maybe it'll be quick, maybe it'll take a while, see a put wall right there. And these bears are going to get too greedy about it. Oh, we're going to keep short and stay in, and all of a sudden watch for the call volume. And if you see that call volume start flooding in, you're going to see a quick reverse. That's why when you notice with Tesla, you rarely see, like, that's a daily chart. You rarely see any kind of accumulation to the side like most stocks have, right? It's just bing, 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 or bing, right? I mean, it really does do that. So it's crazy, all right? Now, Nvidia, still playing out so far. Again, I'll do it just like I did the S&P. Here's his head and shoulders. That right shoulder looks like it's filling out right there. Again, it was down again today. There's the neckline. It's going to be ugly, but I'll draw it. There's the neckline, which, again, I don't expect this to play out because it's NVIDIA and there's too much big money in it. But you never know, because I've showed you my Wyckoff chart and everything as far as the distribution and stuff. And you can see that would take us into that gap. Now, they don't report in November. Again, I'm just going to keep you updated on this. If it happened, it would be fantastic. But I don't know. We'll see. Or at least for people who would like to buy down there. Now, the question, though, is AMD. Looks like it's doing an inverse head and shoulders. I showed you yesterday, and that right shoulder, I mean, it looks like maybe it comes down a little more, but it looks like it's filling out. But the problem is AMD follows NVIDIA. If NVIDIA goes red, AMD goes red, right? If NVIDIA goes green, AMD goes green. So, this is why I'm saying, doesn't make too much sense that will play out. But again, you never know what's going on behind closed doors. And I don't think either one of them report for a while. Now, Apple, again, it finally shows some weakness today. We got a bearish MACD cross. It's below the zero line. It was still only down like 1.5%, I believe it was. But there's the 200. Like, can it come down and tap that? Now, if this does continue to sell down because they report next week, the market will continue red. There's no doubt about that. It is Apple, okay? Now, this is what's crazy. All of this red happened with the 10-year selling off, the 30-year selling off. This was at open. Look, it wasn't spiking. It spiked pre-market, right? The 2-year selling off, the dollar sold off, and then oil went down, right? Like all four of those, was that four? Yeah. All four of those went down, and yet the market still couldn't recover. Like that's what, I haven't seen that in a while. Let me know when the last time you saw all of those going down and the market going down with it, right? I mean, there was just nothing there. So, let me know how it went with you today. Please hit the like and subscribe button. I really appreciate it. For those, I get emails all the time about the membership. And what you end up getting is a daily news brief Monday through Friday with the news, the breadth of the market, where it's heading, and the options ranges that are set for the day and the week on the big stocks, as well as members videos. Usually Tuesday, Thursday, I try to do them for you guys and talk about stuff that really nobody else talks to and talks about and goes in detail on, stuff you can use basically for your whole life. But again, everybody's in the chat, great group of people. I'm of course biased because I really love those guys and gals. So it's loaded. And then literally it's less than McDonald's combo at $7.99. So again, I know I'm biased, but I keep it cheap for a reason. So anyway, hope you guys got some out of this. I'll see you tomorrow for Saturday's video, and then Sunday we'll set it for the week. So have a good one, guys.